Good morning. Today is Tuesday, December the 13th. The time right now in Singapore is 8:47 in the morning, and we are entering the most exciting part of the week, in which tonight we will be awaiting the release of the CPI numbers for the United States, and this will be a highly watched event. This is going to be followed by tomorrow at 3 o'clock in the morning on Thursday morning, our Singapore time, in which we can anticipate the FOMC meeting, in which there will be the last rate hike for 2022. And market has more or less already priced in a 50 basis point rate hike, and more importantly will be the speech after that event, in which the Fed chairman Powell will be basically telling us what is likely to happen going forward. Will there be further slowing down on the rate hikes, or how long will they likely to be holding on to such high interest rates environment? So the market is basically optimistic. We can see that last night Dow Jones, in fact, all US equities actually rebounded towards the close. And as far as the Dow Jones is concerned, the market has already rebounded to somewhere near my ideal price in which to take a counter trend trade. And I think basically the market is just angling for good news. Maybe this is a setup for a disappointment. We do not know. And if the market goes up to 34,008 to 34,146, I think that will be a great level to consider a sell position, especially if we get a reversal signal on the lower time frame. So this is still something that's pending, but this is by far the most bullish equity index. So if we have to sell, maybe this is not the best instrument to sell. So maybe you want to look at other equity index. This is what I'm actually planning to do. Okay, over in the S&P 500, we also saw a similar rebound, and the rebound has basically gone into my ideal price. The S&P 500 rebound went up to as high as 3,990 last night, and my actual preferred target to look for selling signal is at 3,988 to 4,010. Okay, so of course, this is pending the appearance of a reversal signal, ideally in the lower time frame, especially maybe in the 1 hour time frame. So I'm still waiting for the possibility. In the meantime, I've actually placed an order to sell near the 4,000 levels. So it's not done yet, so I'm just waiting. Okay, so my the worst case scenario, if this trade doesn't work out, then of course I'm going to put my stop just above the September high at 4,220, because between this recent high here in December at 4,001 to 4,119, which is only about a 19 points difference, I'm going to use this September high as my guide to actually take for my maximum risk position. Okay, so the downside here is this is not perfectly this is definitely not a good trade setup, in a sense that because the risk reward is about equal. So if I'm going to put my stop above the 4,120 and gunning for 3,800, so I think the possibility is almost equal. So it is definitely a punt, okay, on the possibility of another down leg before the market stabilizes. So we will want to see here. Over the Nasdaq, this is perhaps maybe the better index to actually go short, because it's by far the weakest of the three equity index in the States, including Dow Jones, S&P 500. So the Nasdaq 100 is actually quite a good candidate. Market also rebounded. Now it's into my price range. My price range is 11,700 to 11,780. So you can see that the highest price traded last night was 11,614. So it is almost there already. So we can say that if this is the case, then all we need now is a confirmation of a reversal signal, perhaps in the 1 hour time frame, and then this is to position for another leg down to 11,000 at a minimum, maybe to as low as 10,800. So again, the risk reward will be slightly better compared to S&P 500, because I'm going to put my stop just above the December high at 12,115. Okay, so this may be a better trade setup compared to the S&P 500. When we look at the Asia market, of course, Asia market has just beginning to come alive. Over in Hang Seng, we have not had updates yet. So you can say that yesterday we have a bit of a dip, but on a close-to-close basis, it is not much different from last Friday closing price. So the market is just waiting for some kind of a stimulus, some kind of driver to move it. So based on last night's Wall Street higher closing, perhaps later on Hang Seng will actually open higher, and we will see. So far, the highest ever traded was last week, in which the market flirted with the 20,000 levels. Maybe this level will come back one more time. Just know that in August, the highest traded was 20,283. So this level may be challenged one more time. The question is whether it can sustain. Over in the Shanghai Composite Index, we have also not seen the market opening yet. So based on yesterday's closing, it was a weaker closing, but by and large, it's not much of difference, nothing to crow about. There's no earth-shaking kind of price movement to actually tell us where the market is heading in the near term. But do know that the market is doing a three-wave rebound, and it has actually came very, very close to my ideal target of 3,226. The highest traded last week was 3,225.85. So it was pretty close. Maybe the market will actually go into this bracket of prices before it finds new direction. But again, September high is going to be key. September high at 3,279. 278 is going to be the level to watch. It may challenge it, it may not challenge it. So we have to watch. Over the Nikkei 225, we see the market actually rebounded beyond my expected barrier price. I was thinking maybe the 28,000 could act as a short-term barrier, but yes, this morning it opens and then started to go up in line with the higher closing on Wall Street. So this is to be expected. So maybe it's forming a larger three-wave pattern. So we have to watch. So far, the key level to watch will be 28,500, which is so far the November high. So we want to watch this level, which is not very far away from the September high at 28,660. So do watch out these two levels, and maybe the market will be caught somewhere in between these two levels and then give us a more concise reversal signal. Okay. Over on the foreign exchange, we can see the dollar is still climbing. As of this morning, we can see that the dollar yen is already marginally higher than last week's high of 137.85. Okay, so now this morning we have a marginal high at 137.89. So we have a marginal new high. So that reinforce my idea that market is likely to challenge the 140 level or precisely 139.90 levels. So I think there is a possibility market may continue to edge higher in a three-wave rebound. So this three-wave rebound right now appears to be progressing and is in formation. Of course, if the dollar is likely to stay strong because of the dollar yen movements, then conversely speaking, we can expect the other major currencies to pull back. Okay, last night we did have an attempt to actually go down, but by the end of trading, you can see the market actually still hugging this near-term support line here very, very closely. So we need to see a clean break of this support line, followed by a break of 121 in the sterling versus the dollar, for the idea that the market may actually drift to challenge the 1.1780 levels, which is somewhere in between this target price of 1.17 to 1.18 half. So again, there is a possibility market may actually drift lower in the next extension of this price action. I'm really short the sterling since last week, so I'm holding on to my short position. I'm also short the dollar, euro versus the dollar. We can see that similar to the sterling price chart, you can see that this near-term support line seems to be having some kind of impact on traders, because they have been observing this trend line very, very closely. Right now, we are hugging at the bottom of this support line here, a break here, and then a break at 104.40. 40 will actually confirm that the market is heading lower, and my near-term target is somewhere near the 1.0340 to 1.0285. There's a possibility market may extend lower to test the 10220. Okay, so I'm just going to watch this level, but in terms of risk reward, I think it's quite favorable. If you like me think the market is going to come down, maybe the stop could be above 106 and then gun for at the minimum 101.40. Aussie also is coming down, and he has clearly been tracing out a potential three-wave pullback. If this is the case, I think the market will be likely to head to 0.6630 to 0.66 even. Okay, and the interesting things supporting this thesis is that the market has actually taken out this near-term support line. So in terms of probability, I think the probability of Aussie coming down is a lot stronger when we compare to the chart pattern of the sterling versus the dollar, or even the euro versus the dollar. So I think near term there is this possibility the Aussie dollars may actually extend lower to 0.66. In the dollar versus Canadian, similarly to the slightly bullish outlook for dollar yen, we can see that the dollar is possibly tracing out a larger degree three-wave, and if this is the case, I think the market may challenge 138. So 138 is not that far away from the November high of 138. Okay, so you can see that this does has a certain reference point here. So again, mildly bullish on the dollar. Then over at the crude oil, we have a very big move last night. You can see that the oil market actually has a very sharp move last night after testing the lower end of $70. Remember last week the market actually went down on Friday to $70, which is the lowest level it has actually traded this year, and the market managed to recover, but yesterday afternoon we can see prices coming back down, and in the early hours of trading in New York, prices was still looking for some kind of sell stop order. When they couldn't find any sell stop here, they started to reverse position, and you can see this spike up was very strong, and the key level to that I was watching was $72.92, and the market has actually taken out this to me a barrier level. So it has closed above this level. Now the next level to target will be $75.44. So by and large, I think the sentiments for crude oil is still very much in play, and I think the latest that is in the news is that of course we all know China is relaxing the zero COVID policy, and that is keeping the market very excited, because if China actually further eases the COVID very strict protocol, it may actually encourage more consumption, because Chinese now are able to travel. They can they don't need to observe the very strict lockdown anymore. So that means that there will be more demand for energy products going forward. Okay, so that is underpinning the oil market. And of course, Russia has also mentioned that they are not going to sell energy products to any country that impose a $60 cap per barrel on the oil, and they may even restrict production. They already have an agreement with OPEC Plus to cut 2 million barrels per day in the oil market. So if Russia go ahead and further unilaterally cut their own production, that may cause the oil market to rally. So do watch out for this possibility here. Okay, and over in the precious metal market, we can see that gold has actually pulled back. The gold prices, if you look at the gold prices, most recent high 2 Mondays ago was $1,810, and then the market dropped quite sharply, about dropped almost $35 to go down to $1,763, and then bounce back up to challenge this level. But all they could do was 1,806 before it started to decline. So this decline here in the wider picture may actually cause crude oil, gold prices to actually pull back a little bit more significantly. There is a possibility market we can actually do a three-way pullback to as low as $1,735, or to maybe even better to 1,725. So this will be the bracket to watch out for prices retracements. So I've basically taken a very small short position in anticipation of this further decline in gold prices, keeping my stop just above the 1,810 levels. Silver is by far the more bullish of the two between gold and silver. You can see last week the silver prices went up to $23.68 with very little pullback. So you can see that the demand for silver is a lot higher compared to gold. So by and large, we can see that if there's going to be any kind of pullback, it will be quite limited. The best we can possibly expect is maybe $22. So even that will be a challenge. So you can see since last November's expiration of the COMEX silver prices, we can say that most of the expiration end up in delivery, and that is causing a problem for the COMEX, because warehouse stock for silver is actually not very high, because COMEX is not usually the venue to take delivery. That belongs to London, but because of the tightness in the physical market, speculators has actually shifted their focus on to COMEX and to actually effect delivery. So this is causing the underpinning higher valuation of precious metals, in particularly silver. So silver and gold will be very interesting to watch next year, because I do not believe inflation is going to ease to the point whereby we can actually celebrate the end of the inflationary period. We could be seeing something very different, and that could be supportive of precious metal markets. Over in the cryptocurrency market, we can see that the crypto actually managed to rebound in line with the higher prices in US equity, we can see that the market is doing possibly a three-wave market, having the Bitcoin having hit a high of 17,425, has been struggling since the last time it challenged was actually Friday, where we see the market going up to a high of 17,560 levels, and then it started to drift again. So we can see the market is basically doing sideways, and there's a possibility the market may actually drift lower. If it challenges the upper end, I think this bracket of prices at 17,300 to 17,660 is going to be a very, very big high mountain to climb, and I think the odds is that it will come back down to test the lower end, the mid end of 16,000. So this will be my actual target to look out for Bitcoin. And of course, in Ethereum, we are seeing similar activity. The market has having rebound three-wave to $1,308, has actually been struggling to find direction. And right now, we can see this sideways movement may see prices actually drifting lower to test the 1,200 levels. Again, I'm not saying that this level is a good level to buy, because I do believe that we are going to see more pain in the crypto space, especially after last night. We have the SEC is going to begin a lawsuit against Binance, accusing them of money laundering. So that is definitely not a bullish news. That's actually quite a bearish development. So with all this negativity surrounding the crypto space after 1 month after the FTX blow up, so it's adding more layer of pessimism into this space here. So the odds of the prices of cryptos, tokens and coins actually drifting lower is actually very, very real. Okay, so do watch out for this possibility here. Of course, this Ripple is a victim of lack of news. Okay, the SEC lawsuit against Ripple Lab has to date has not come to any kind of verdict. So this is causing market to drift sideways. Okay, we can see that prices actually took out the November end November low, okay, at 0.3712 last night, and before it rebound, okay, in line with the rise in all the other tokens. So this market is basically finding direction. There's no real motive behind this movement, and it may eventually drift lower to maybe to test the 0.37 to 0.35 levels. So do watch out for the possibility here. Binance Coin, of course, is suffering because of that news that I just mentioned. The SEC is likely to sue Binance for money laundering. So that caused the Binance Coin to actually come down very sharply relative to the other coins to as low as $271.90. In the absence of this particular news, I would have no problem going in to buy, okay, because this has been my target area of I think likely support. But in view of the very possibility of being sued by SEC, this becomes something that we want to watch and maybe do not want to get involved in right now. Okay, so I'm still maintaining a wait and see kind of attitude. This Dogecoin here is a meme coin, no real fundamental behind them, so we are again seeing the market trying to find directions. Okay, I'm going to head for the airport right after this, and I'm going to Hong Kong to attend I'm invited to speak at an event at the expo in Hong Kong. So if you happen to be in Hong Kong, do drop by. It will be at the World Asia Expo Center near the airport. So I'll be there for the next 5 days, and I'll come back on Sunday, hopefully in time to do the weekly market rep. So in the meantime, take care, and I'll see you again tomorrow morning when I will record a session for you from Hong Kong. In the meantime, take care. Bye-bye.